My friends, welcome back. Asked if we wanted a quick little update video out there on Twitter, and a bunch of y'all said yes, so I'll jump in here and make a quick little update. Obviously, not a start to the week like what I wanted. What I was hoping for would we would start kind of a counter trend rally back towards at least that 585 at a minimum, up here towards the 50 and the 100-day moving average at a bare minimum, up to the 20-day moving average, which, whoops, let's make that yellow. Which is also right back up here at 593. So there's still a lot of confluence up there. I said on my video yesterday that I liked everything about the way SPY looked, minus the fact that it really didn't take out all these people at 565. Like, we didn't quite get below it. So there's no doubt about it that sellers are still in full control at this point in time, and that's okay. You just got to deal with it unless you got enough money to change the market. I don't. Then you just got to go with what you're given, so to speak. I started out the day losing $60,000 in Tesla calls and was able to make it up both between Nvidia and Tesla puts. Was able to finish the day up 30,000. So it's this is just one of those guys situations of it's not how you start, it's how you finish, so to speak. At the end of the day, of course, all of my long-term positions are taking a beating right now. I'm always going to be net long, so even when I make money on puts, there's a very good chance that overall it's still a losing day for me on paper. But like I said in my Sunday video, I'm a firm believer. I hold out hope and optimism for the future. Just like when the bear market came of 2022 or the COVID crash of 2020, like a this too shall pass. I posted on Twitter, which if you haven't done so already, please follow me there, Colin_Gladman. That, this is one of those days that for me is just I plug my nose and I do a little bit of shopping. I don't full port or go, oh, this is the bottom. I'm not trying to call tops or bottoms is always a fool's errand. You'll hear me say that a lot. But it is one of those any day that the overall market sees like a 4 to 5% drawdown. Lots of individual stocks see 15-20% drawdowns. It's just something that I'm going to buy because I believe in the future that I'm going to be much happier that I bought rather than I didn't buy. So that's just the way that I have to approach it. After closing below this 565, what we're going to be looking for, I like the fact that the volume picked up a little bit here today, giving me much more closer vibes as kind of that real high volume capitulation candle that I'm looking for. So what we'd be looking for tomorrow, team, is going to be something that looks like this, even if it's a lower volume inside bar that pushed up and rejected that 585. If you'll remember on Twitter, I basically said, yo, we've got 2 days in a row of a failed support resistance flip. The volume decreased today, and then the very next day we gapped down and continued to sell off. So we are in a little bit of a pattern round of kind of like ugly red day, decent green day, ugly red day, decent green day. Not that that has to continue by any stretch of the imagination, but with CPI and PPI both coming out Wednesday and Thursday before open, it makes sense to get a decent short covering day, short covering rally. If you're really bullish, the most bullish thing that you could have would be some type of gap up above 565. I think that's probably towards the least likely scenarios. So I still think it's, even if we gap down, something that puts in an inside bar, pushes back up, tests that 565 area is going to be the most ideal thing. And then obviously anything that's a bullish inside bar that closes above 565 would overall make me feel pretty decent headed into CPI. If things get ugly, well, uglier anyway, I think it's very real that we need to start looking down here at this 540 area. Obviously, a lot of confluence that happened back over here. This was back over here in the carry trade fiasco, if you will. That was kind of our support before we gapped down and then shoved right back up. But it is important to note that today is the first time that we closed below the 200 SMA on SPY since all the way back over here in November of 2023. We hit a total, I believe it was like right at 10% on SPY. today in as far as total drawdown. No, not quite. About 9.5%. So we're within that range. I still think that even though I made a lot of money on puts today and lost money on calls, I still think we're getting towards that range where we're at least going to have some type of a snapback rally. The reality is if inflation comes in decent, then if this week closed up back up here at 590 to 600 plus, I wouldn't be surprised in any way, shape, or form. And then, of course, we would just have to watch and see how we approach those highs if that happens. Inflation comes in bad. We get that little mini crash, then I think very much that 540 is on the table. We're in just kind of that range of like really between 565 to 540. There's not just a ton of meaningful support. Yeah, there's a little bit of support over here at like 550, and obviously 550 just being kind of like one of those key psychological numbers. You can always factor key psychological numbers as coming into your equation, but really since that carry trade this past summer, if we take a fib from those lows, which is going to be that August 5th and fib, easy for me to say, you can see we hit that 50% retracement today and we closed back above. Now we are obviously dripping down a little bit in after hours here, so I do think like there's just no real signs of super strong bullish territory here yet. So coming down to the 618, which is going to be that 550 area, so somewhere between 550 to 540 makes some sense if things continue to stay ugly like with the inflation data. We're all going to be, obviously watching what that is. If, let's see here. Yeah, this was that September 11th candle where I flipped back really bullish. If we go from there, we bounced off the 786 of that today. So even though we had a decent close with, Zelensky coming out and being like, I am sorry, Mr. Trump, I apologize, please take my letter, then, yeah, who knows how that's going to hold up. That's such an on-again, off-again relationship. They're like middle school girls, or like a middle school relationship, rather. We're on again, we're off again, we're on again, we're off again. So you have to be conscious of those type of headlines. That type of headline could come out overnight, as a matter of fact. So I'm not too worried about where we open tomorrow. If we open below today's lows, that's definitely going to be bearish. I would expect a continued sell-off. There's no doubt that this is not just a nice neutral corrective move. This is more of an impulsive move to the downside. For instance, like back over here in summer of 2023, like this is obviously just a corrective pattern kind of making out a huge overall bull flag. That is not the case right here. I mean, certainly not unless we start getting some snack back rallies going on. And honestly, not even the same as right here. Like I kept saying on X, that this was very normal and corrective, and we continued to push up and out of it after that. But the volume is increasing. However, volume at the lows is signs of that stopping volume coming in. Back over here on Tesla, when it was all this high volume came in here, right over here, at the lows, I said, yo, this is like a selling climax right here. We're about to push back up towards that 260, 270 area. And that's exactly what happened. And then, of course, we rolled over after that. We'll get to Tesla here in just a second. So how that translates to Q, I had marked off in my Sunday video kind of this 471 area. So we came down, we bounced off that 471, but once again, looking pretty droopy in after hours. So coming down below that. So we do have some key areas like right around that 448. And then of course the August lows at 422. So I do think that most likely, so if SPY comes down towards that 540 area, then you're definitely going to see QQQ come down to that 440 area. We have, there's just a real growth scare out there right now between, tariffs and recessions. And so it's money is getting sucked out of a lot of those bigger tech names. Once again, is what it is. Nothing we can do about it. But yeah, I mean, this is, I feel like there's more signs of kind of that stopping volume coming in on QQQ. I said in the Sunday video, I'm okay if we roll over and retest the previous lows, but I don't want us closing at new lows to feel like we're going to get that that rally. So now, same thing. Even if we roll over, we testing new lows is okay. We just don't want actual new lows to be put in. So we still have, and we still have this gap that's open right here, yeah, at that 448 level. So that makes a lot of sense if we continue to sell off, which would bring that total. So I just said SPY was what, 9.5%. So QQQ, so growth, all your tech is down almost 14% now. If that sell off happens, it's going to be pretty close to bear market territory. Yeah, we're going to be at a 17% drawdown at that point in time. As of right now, you're looking at this as like, dude, this is a pretty clear double top on the chart. So if we look at our same fibs that we had from that last real clean major low, whoops, not a line. Give me a fib trading view. Thank you. And we run it all the way back to the top. So 464 is our golden pocket. But yeah, that 446, so like right around that 448, that would be the 786. So yeah, it's hard to say. I mean, I'm not just going to stand around and call bottom all day, every day. But I do think that there is a meaningful chance, like especially if inflation data comes in decent, we're going to see that rally for sure. So while I still think it's okay if you want to scalp some puts, like for instance, if we gap down tomorrow, I don't know, let's say into like the mid 460s, and it open, you push back up and you test that 471, it might not be a bad idea to grab some puts as a hedge for a potential rollover at that point in time. Start looking good above 471. Yeah, I mean, man, it's just, yeah, that volume after this big of a downtrend, I really feel like we're coming close to the end of at least a snapback rally. There's no doubt. I 1,000% agree that these are all very distributive looking charts. And so even any type of rally that we get, I think you can trade to the top side, but I don't think it can be trusted until, I mean, these are busted up looking charts, no doubt about it. Let's see here. As far as Tesla goes, so kind of this 211, 212 area, let me back out to the weekly chart here. You can just kind of overall see the important support resistance flip. Now you could also come down here to like 194, 195. That's also, so let me just throw up both of those. That this area would absolutely be the area that Tesla would need to hold in. It basically took 8 weeks to gain 134%, and we are now in 12 weeks as of right now at 55%. So this is just kind of one of those, if you're a long-term believer, it's the kind of close your nose and buy, if you will. From a technical standpoint, also too, so here's our all-time high trend line that we had the false breakout. This was when like Robotaxi was initially announced, and we had the false breakout, and then the Robotaxi event, another false breakout. Then we actually broke out and we ran. So from a pure technical standpoint, you're coming back and you're retesting that. Sure, you could absolutely come down lower into that 195 to 212. Historically, I think I saw today that this was Tesla's like 5th or 6th worst day in history. I mean, historically, when you have these type of nasty drawdown moves, like, I mean, holy cow. I'm just kind of now looking at this. Okay, so yeah, so COVID was a 63% drawdown is the reality of it. But you get that V-shaped recovery. So, you do your own due diligence. I don't care what you do with your money. I'm just saying I'm still buying Tesla here. I am. It's obviously knowing what I know now. Do I wish I would have trimmed a lot more out up here? Absolutely. Of course. I'm not going to sit here and be, blinded to that or anything along those lines. I think you have to take into account that if things get ugly enough in the market, that we could come down here and even retest this trend line from that January where we also bounced in April. So that'd be around like 180. before potentially starting to work our way back up at that point in time. So I'm not just going to put the blinders on and, like I said, be a cheerleader as much as I own a Tesla. But it is getting to some very important technical points. It's insanely oversold on a daily, like I said. But this is why I don't just blindly trade off of RSI. Because if you just bought down here the first time it got oversold, you bought up here at 284 and now you're sitting at 216. But the daily RSI is getting down here to 20. Let's go back here and see. So, but like here's another perfect example. It got down to 17 back over here in January of 2024 when it bounced. And then all it did was basically create a massive bear flag before then dropping another 31% after that. So just because like, oh, it's incredibly oversold. Now, obviously, here's what I would like to have happen. Very similar situation back over here in December of 2022. This is when Elon was having to sell all of his shares for Twitter. And then Tesla immediately put in like a 2-week, well, basically a 1-month rally where it went up 100%. So all bets are off right now. It is hard to believe that, which I'm not going to get into conspiracy theories here or anything like that, but it is hard to believe based on everything he's doing with Doge and everything like that, that you don't have big money that's upsetting or that's upset and is trying to hit them where it hurts the most. He came out today and said Tesla's going to be fine long term. And if you believe that, buy. I mean, if you believe that. If you don't believe that, then short. Like I said, I do not care. Buying Tesla on major dips has always served me well in the long term, and I'm gonna ride the horse that got me here, so to speak. So, but that's what I'm going to be looking for. I would love something that retraces more. I was telling the team with good inflation data, I still think Tesla could finish this week around 240 to 250. So what I would love, I mean, the best looking candle tomorrow is something that gaps down and then pushes up and then closes over 236. That's going to be your best looking candle for tomorrow with some increased volume. Maybe not increased because this was also very high volume. But like I said, this is capitulation style volume. Like I said, when you have volume coming in down here at the lows, right? They just don't believe me. Like this is what the charts show. Get over here. All this volume that came down here at the lows. So we'll see. We shall see. Let's see here. NVIDIA, I made good money on puts here today. I'm surprised, honestly, how well it held up. Only a 5% down day when Q was down, what, like 4%? Even worse at the lows. Yeah, right at 4%. I still think you're going to see at a minimum NVIDIA coming here into this 102 to 95 area. This is a very disturbing chart for me, along with Microsoft. I mean, these are looks that cannot be ignored. Microsoft gap below, didn't even really retest this strong daily support up here in kind of the 380s. This thing could be, I mean, after a year long of distribution, Microsoft looks like something that could get hit real hard if the market stays ugly. Amazon put in a decent day. Don't hate the look on it. AMD bottom callers are about to have another opportunity. They successfully called 0 of the last 400 bottoms since this kind of blow off top, which also reminds me that both Hims and Hood scarily look like this. I've talked a lot about potentially making Hood a long-term position for me, but not when it looks like this. I mean, I wouldn't even consider it until it's down here, see how it reacts maybe around the 200 day. I think I said in yesterday's video, I was like, I'm gonna wait until I see at least 35. I think 35 is going to happen. I didn't think it would be one day later, full disclosure. So I'm just not going to jump in front of a candle that looks like that. But like I said, so look at Hood, has a very similar, sorry, let me get rid of some of these moving averages and stuff here. But if you look at just the similarities of kind of what a blow off top looks like, right? So and this is kind of what I'm talking about with like a counter trend rally, right? Like this, something like this is coming, probably something to make people feel good again. I mean, this, and it looked good, right? Like it looked like a bottom was found that moved up. Nice little bull flag starts to get up here, and they had, this was something like they had an event. I remember that because I was in calls right here, and got out okay. Should have done better though, for sure. Should have got more profit on that move. But that was a nice looking move. So there's going to be something like that. So be careful about just overbuying any counter trend rallies. As of right now, Hood, and there was a little bit of disappointment too. No inclusion to the S&P. So Hood's dripping a little bit more here after hours. Yeah, let's see if we can, just from an extension standpoint. Yeah, so I mean, it stopped right at that 35 today. So, man, yeah, and there's so many confluences down here around that 27 area. If we look at Hood on a macro view, I just kind of telling my Discord team that it potentially could kind of form out like a massive cup and handle. Typically, these handles are going to retrace at least 20%, but a lot of times that 30%. So, yeah, right around 30. So, in the 382s right here at 28. This was just such an imbalance that's left right here, and gap that happened here on the weekly. I feel like Hood's going to come down at least to 30, if not 28. And it kind of, and then it could take some time, but that's where I think I could potentially start something out that builds out like this, and then eventually, when the markets turn, because they will, try not to get, it's, you don't make permanent decisions based off of temporary problems. That's the way to put it. Is don't, if you're scared and you're emotional right now and all that kind of stuff, you need to not thinking about doing anything other than getting your shit together. Like that's the truth of the matter. It's the market doesn't care about your feelings, the market doesn't care about your levels, the market doesn't care about anything. So that's the way you have to approach it, my friends. You cannot make emotional decisions with your money. It just never works out. It never works out well. Like there's just levels where I'm like, okay, this is, it's the, when Tesla was at 480, so many people were like, if Tesla ever comes back to 250, I'm loading the boat, man. 200 even better. Okay, well, now's your opportunity to put your money where your mouth is. I am. But are you just some, mouth breather keyboard warrior, or are you actually going to do what you said you were going to do? Or now that it's back here, now it's like, well, hell no, I'm not buying that. It's scary out there. That's just, children don't make it in the market, guys. But there's a lot of scary busted up charts. Like I'm not trying to discount that. I'm just saying that buying fear has served me well throughout my career. And that's what I'm going to continue to do. HIMS, I still think is going to probably come down here towards 25. Waiting on that 200 touch. Let's see here. Unity. This is kind of the big trend line I'm watching. So from these lows back over here, the earnings where it initially got that pump, right at that daily trend line, needs to see some life. As you can see, it's sinking in after hours right now. But as long as it stays above the 200 day, it's like I said, I mean, at first I was kind of like, dang, I was kind of upset that I sold at 28. Now I'm ecstatic that I sold at 28. So in my small account, I wiped out all those positions, went to all cash. In my small account, I sold LTBR, I sold Unity, I sold Oklo, I sold GRRR. I sold SoFi, I sold everything. And there was like 1 or 2 days that a couple positions got a little bit higher, but pretty much other than that, we haven't seen new highs since. So unless it's something you just really, this is not the time to be holding or buying anything that you don't believe in for the long haul. That's my opinion on things. So it's like, speaking of SoFi, I talked yesterday about how wanted to see this kind of previous all-time high daily supply hold. Came down, touched off the 200-day, or I'm sorry, did not touch off the 200-day, but came down close. Saw a little bit of buying at the end, but yeah, this, unfortunately, this head and shoulders played out here. Let me... So from where SoFi really got its move, yeah, and it hadn't even come back down to that 0.5 yet, around 1050. 1050 is going to be kind of your next big spot. You can see the daily support here. Plus, when we look left, that was the top back over here in December 2023. So you could argue maybe some interest rate cuts. If inflation, and they start factoring in more cuts, that can help out names like SoFi. But I wouldn't be surprised at all to come down here and take out this golden pocket down in here, like around 8 or 9. Let's see here. ASTS held up okay. I mean, obviously it was a terrible day overall from a 13% down perspective. Still like it if you can stay above that 25. The reality is, it just kind of looks like you're coming down here and retesting. Volume stayed low on this, so this just kind of looks like overall pullback with the market. If the market recovers strongly, ASTS could have a really nice couple of days. GRR does not look good. Lost that support resistance flip here. So if it does come back down here, if you start getting a bounce around 20 and you come back up here to around 30, just be careful. Definitely a head and shoulders could form up here. Still don't love the volume for it, but it's absolutely a possibility. Google's one that's not looking terrible down here. I mean, and it's certainly coming towards heavy support in that 160 area, but it's just not something. I know I've been saying this a lot lately, guys, so forgive me if you've been here with me for a while, but it's just, I don't think it's the time to add unless you think something has a minimum of like 3 to 5x upside from here. It's, you know, some of these companies that, you know, have already had tons of success, the Googles, the Apples, all that kind of stuff, which Apple looks terrible. I really think Apple's probably going to come back down here towards 200 to even 180 if the market's bad enough. It's kind of got this bear flag look going on. Let's just see what the measured move of that is. You know, it's, they got in bed with China and that helped them for a little bit. Yeah, see, like that 1.618 is almost right here at 189.50. So I wouldn't be surprised at all. It's just a, you know, I've been sizing way down on my positions. Been raising cash, so even when I am trading with lighter amounts than I am. I used to start all positions with 100 to 200 contracts. Now I'm starting with like 50 contracts. I did, full disclosure, like on Tesla, which still look fantastic right now. But I did grab some calls here on Tesla today when it came back down here towards the previous all-time high trend line, like right around that 228 level. No, I'm not going to give you my position, but I mean, it looks like those might turn out to be a loser. And you just, like, really what we should do is normalize having bad trades sometimes. Like all these different people on Twitter, everybody wants to act like they trade perfect and everything like that. And I always say, like, I plan on being wrong 30 to 40% of the time. It's okay to lose. It's okay to admit, like, I lost money. It's okay to admit I didn't trade perfectly. So, I don't know. Looks like, I mean, I said I finished back up today, 30 grand, but it looks like I'll be down about 20 as of right now, with unless we get some love in after hours, but it doesn't look promising. Let's see what's Bitcoin doing. Bitcoin's actually holding up decently. It really is. I'm absolutely, if we come back here towards these previous tops from March of 2024, is kind of the next time I'm looking at buying more. So if we see around that 73, no, I don't care what any Bitcoin bros say literally about anything. Definitely not good that it rejected off its 200-day, but you see Bitcoin start to recover. That, you know, that's going to be your sign that, you know, potential risk on assets are back on the table. That'll help things like the micro strategies, the Teslas, the little bit more, riskier, risk on investment style. But right now, Bitcoin's saying it's risk off. And like I said, when the market talks, when big money talks, you just got to listen. Yeah. Oh, Palantir. This one really looks bad to me. Could not hold that. So that wall at 80, whoever was buying there, finally broke. I think it's already down to 72. In my voice chat today, after close with the Discord, I said 70 was very likely, but I really think it's coming down to the low 60s. But I still think eventually it's going to come touch the 200-day moving average. I really do. And so that would be around 51. And it's this earnings gap back over here. It certainly could take that out, but like I said, the Palantirs, so Palantir, Hood, Hims, there's just so many charts that kind of have these blow off top looks right now. So do what's best for you at the end of the day. Just make a decision that you can put your head on your pillow at night and go, I did the best that I could. As long as you can look in the mirror and go, I'm not being an emotional toddler. I'm doing the absolute best that I can. This too shall pass. It's all about surviving and advancing and preserving capital for those dips it's everybody wants a massive dip in the market. It's that stock market's the only place that everything goes on sale and nobody wants to buy anything. Everybody always wants a massive dip until the massive dip gets here, and then they don't buy it, and then they wind up chasing later on down the road, and then they wind up becoming the bag holder. So I don't want to go as far as this is generational opportunity, but the bottom of the bear market in 2022 was generational opportunity. COVID lows, generational opportunity. There will come times where you can make an insane amount of money, but you have to be willing to buy the ugly. You just have to. All right, my friends. Much love. I'll tell you what. While things are rocky and a little crazy and everything like that, I'll try to stay on top of these videos a little bit more for you, so we're gonna ride the waves together. This too shall pass. Much love. I'll see you tomorrow on Twitter. Like, subscribe, all that crap. Have a good one.